Good morning. I'm Peter Milios from the Finance News Network. Stocks fell on Friday due to a strong jobs report, causing some investors to worry about the Federal Reserve continuing to raise interest rates. The seemingly endless announcements of mass layoffs notwithstanding, Americans haven't been this employed in more than 50 years. The Bureau of Labor Statistics said on Friday that the US added a whopping 517,000 jobs last month, and the unemployment rate dropped slightly to 3.4%, the lowest it's been since 1969. Major central banks last week also raised interest rates to their highest level since the global financial crisis. Yet investors rushed into equities and bonds after officials hinted that the current cycle of monetary tightening may be nearing its end. Investors were buoyed after Fed Chair Jay Powell said the disinflationary process in the US economy was underway. The S&P 500 fell 1%, the Nasdaq Composite fell by 1.6%, and the Dow Jones Industrial Average fell by 0.4%. However, the S&P 500 still had a positive week, closing higher by 1.6%, while the Nasdaq Composite gained 3.3% for its fifth consecutive winning streak. Whilst the Nasdaq is up 15% to start the year after plummeting 33% in 2022, some sobering news last week from the big three in Alphabet, Amazon and Apple indicating slowing demand from everything from iPhones to digital ads to cloud services. The process to become leaner in the wake of macroeconomic pressure contrasts starkly with pandemic-era hiring boom, with headcounts increasing rapidly at tech companies that were responding to a rise in demand in digital products and services. Severance costs for tech companies is expected to be in the billions of dollars. Only Apple remains the only large tech company that has not announced any job cuts or cost-cutting programs, despite on Thursday reporting its first decline in quarterly revenues in 3.5 years. It appears that cost-cutting has replaced growth on Wall Street's checklist, and tech executives are being celebrated for efficiency over innovation. Across the sectors, earnings reports were the story of the week, with results landing from many of the world's most valuable tech companies. Overall Q4 earnings metrics remained underwhelming, with just 69% beat rate and a 0.5% aggregate positive surprise rate. Of the 11 S&P 500 sectors, 8 ended the week higher. Communication services sectors led gains, driven by Meta's encouraging results. The energy sector was the top loser as crude oil prices dropped. The SPY futures are pointing to a 0.2% gain. Have a good day.